What's up, you guys? All right, well, this was my 45th consecutive green day, starting with some trades pre-market on GNUS and CIDM, and I'm finishing with over $26,000 in profit. This is the fourth day in a row where I've made over $20,000. I'm now up over $100,000 on the month, and it's June 4th. So this is crazy. I mean, the market's on fire here, and I'm not easing off the gas. I mean, I'm trying to continue to be aggressive and capitalize on it. And you know, today I actually felt a little frustrated because I had a close call on a dip trade that was on GNUS, and it was right at almost the same time, I guess, as a tweet from a activist short seller. And you know, it halted going down, and I was long into the halt going down. It did pop back up. I got long on the pop and I sold, but then it ended up dropping all the way from like $10 down to $4, which was on about 5 halts going down. It was crazy. And I tried to do a couple dip trades during that period and had a couple nice ones. And then I was like, all right, I've got to stop trading. I've got to switch gears, you know, go do class, because we're in summer school right now. And so I stopped watching it, and then it bounced from 4 back up to 8, and I missed the whole bounce. And I was like, oh my God. Not only did I have a close call, which was like, you know, I mean, I was looking at what people were saying was what they thought was a catalyst. People thought that there was a secondary offering at $2, and I was looking at that, and I saw that there was a shelf registration, but I didn't see a direct offering. And so I was like, well, you know, wait, is there news somewhere that I'm not seeing? And that's kind of the purpose of a circuit breaker halt. It does give you a chance to sort of figure out what the heck is going on. But I wasn't totally dialed in on what was going on, even on resumption. It resumed, it popped up. I was like, okay, I'm out of that. That was confusing and kind of not a preferred situation to be in. And then it ended up with that really big sell-off, bounce off the low, and I missed the bounce. So GNUS total profit on that one is $6,500. Total profit on CIDM, $20,000, which is crazy. CIDM pre-market squeezed from $3 up to $4. The pre-market high, I think, was like $4.50. I mean, it was crazy. And traders right now, very clearly, are not waiting for the bell to ring. However, let's be careful tomorrow, because that action on GNUS today may set the tone a little bit. And CIDM, although it's still up 170%, it's at 350 right now, and its high of day was actually at $6. So it's below the volume weighted average price. It's definitely pulled back. GNUS is at 6, but that's a big red candle on the daily. So it may be time today to pump the brakes a little bit, slow down. You know, I did okay, but I had a couple close calls, and let's see what we get tomorrow. You know, although again, if I had traded that dip on GNUS, I could have, I mean, that was a $4 a share dip, bounce. So I mean, this could have been, you know, a much bigger green day, but of course, to take that, I would have had to be comfortable with the risk and the confusion of what the heck was going on with the stock, and I really wasn't at that point. So, you know, so try not to get FOMO over something that really in no, I feel like I have a spider in my head. Like, I don't know what that was. It's very possible, because there's been a couple spiders I'm seeing around here. Anyways, try not to get FOMO over not doing something that you would have had no business doing, because it would have been so far outside your risk parameter. I'm not going to feel FOMO that I didn't invest $5 million in Tesla, you know, last year. Like, you're not going to have FOMO over that if, number one, you couldn't afford to, and even if you could have, it would have meant you would have been like taking a mortgage on your house or something. So we don't get FOMO over things that we would never have done. But sometimes in the markets with trading, we do catch a little bit of that FOMO over seeing a big move, and it's like, man, I wish I was the type of person that could have capitalized on it. Well, you know, can wish a lot of things about ourselves, but we are who we are. You didn't capitalize on it. Maybe learn from what happened, but generally, you didn't take it for a reason. Now, if it's because you actually just missed it completely, all right, you can feel frustrated. But if it's because you were watching it and said, no, I can't afford the risk, you made the decision. So stick with that. All right, now, summer school is continuing. Today is day 4. Tomorrow will be day 5. We'll be running summer school through the whole month of June. So if you have not already checked out our summer school program, check it out. There'll be links on the description, links over at warriortrading.com. So make sure you check that out. And if you haven't already given us the thumbs up or hit the subscribe button, the Day Trade Warrior account has grown 50,000 subscribers in the last month and a half. We crossed 500,000 and now we're at 550. All right, so help us get up towards 600, 700, 800. I can't wait to hit that 1 million subscriber mark on YouTube. And we're gonna get there because you help us. So hit that thumbs up button, hit the subscribe button, and I'll see you guys tomorrow for our Friday watch list live streaming right around 9:15. All right, see you guys then. All right, so we're gonna go over the trades from today. This is now the 4th day of the week where I'm up over $20,000. Total profit today, $26,924. And I feel like I'm leaving a little money on the table because I was doing dip trades on GNUS right here, which was a close call. Sold right here. I did another one. I tried to do one right here, I didn't get filled, and then I did another one right here for about $600 of profit, and then I didn't do this one, and that's the one that ended up halting going up, and then going into a second halt going up. So yesterday, I actually overstayed my welcome a little bit on GNUS, taking one last trade after class had finished, and after I'd done my recap and everything for the break over $8. And there was, as I took that trade, this is a 10-second chart. As I took that trade yesterday, there was a 250,000 share seller at 8, and I ended up stopping out with a $3,000 loss. So that hurt my profits a little bit for yesterday. If I go to overview, we can go into June. So I finished up 24,000 instead of 27,000. So kind of a little bit of a bummer there that I had that unnecessary loss going into the close, but certainly made that back today. $6,500 on GNUS, 20,000 on CIDM. CIDM leading gapper, gapping up 174% with 23 million shares of volume as of 9:15. And GNUS was actually gapping up only about 14%. But I liked it because after hours, it squeezed and broke through 8 and had a after hours high of about $9. Pre-market, it came back up to, let's see, right around here, 88. It then faded off that level. It then came back up a second time and faded off that level even harder. When it came back up a third time, I was actually watching it pre-market. I was up a little earlier today, so I came over because I wanted to see what GNUS was doing. Sometimes if a stock is really strong after hours, I will get up early the next day and see whether or not it's something that's going to give a pre-market trade. And this did have a lot of volume pre-market. When I was trading it pre-market, well, it had 15 million shares by 9:15. So very thickly traded. I did not take the break of 88. What I decided to do on this pre-market, and this was my first trade of the day, I took a trade, let's see, let me zoom in here. I let it break 8, so it had that false breakout, 888. It then popped up to a high of 924, and I bought this little pullback right here at about 918. It hit a high of 930, and in that trade, I made a couple $100. Then I got back in as it popped up here for the break of 930. So I was back in at 930, it popped up to 950. Then it squeezed up to 960 and up to 975. And so I did fairly well on that. I think I made about $1,300, maybe $1,400 of profit on those two trades pre-market, and that was at like 8:30. It then pulled back, and when it came back up right, let's see, right here, I got back in anticipating the break back over the $0.50. It hit a high of 51, and I stopped out of that with about a $500 loss. So I gave back half my profit. And before the bell was ringing, I was only up about $400, maybe $500 in total on GNUS. So
I wasn't in super great shape, but I was watching the pre-market high. Now, for Warrior Pro students, I recorded my trades starting when the bell rang. My pre-market trades, I wasn't recording because I was live broadcasting on YouTube and Facebook, which is when I'm doing that, I can only record the screen that's in focus, which was my scanner screen. So anyways, the first trades I think right out of the gates were on CIDM. And then I jumped in GNUS as it started to squeeze up. So GNUS gave us I don't know why it does this. When I try to grab this to move it, why it does that, because it's very obnoxious. All right, so anyways, moving that over there. So GNUS, this was the breakout. I got in long for the break of 10. It flushed down to 920. I was down on 5,000 shares about 70 cents. It popped back up to break even. I got back out break even. I was like, whoa, close call. It then breaks 10 and I got back in at $10. There was a big seller at 10, so I let it come down 20,000. 18, 17, 16, 15, 14, boom, boom, punched it. Back in with 5,000 shares, it pops up to 1050. Drops down, it comes back up. I add right here for the break over 1050. It rips up to 11. Micro pullback, add for the break of 11. It rips up to a high of 1173. It then flushes down here. It drops, as you can see, to a low of 1005. I bought at 1005 and it was halted going down. Halted for 5 minutes. It resumes and pops back up to 11. I sold on the pop back up. A risky trade. I was trying to do a dip, bounce off the VWAP. I did not think it was going to halt. I thought it was going to test the halt and then bounce up, but it ended up being okay, as it was still bullish in this part of the day. It's still above VWAP, and there was no news out on it. I took another dip trade off of 10 right here. This one was so-so, and then I took another dip trade on the 1 minute, and let's see, this was actually, let's dial that into a 10-second time frame. This is one of the things I do like about eSignal, is the ability to see these shorter time frames. So I got long as it flushed here, having taken profit and having made money on this trade here. I tried it again here. So I was in on this drop, false halt. I thought it was gonna be a false halt, but it was actually a halt. It popped up out of that halt, similar to the way it did here. So that was fine. But what I didn't realize at the time was there was a tweet from Citron, which some of you guys may be familiar with. They are an activist short seller. They've taken big short positions on a number of different stocks, and they're pretty vocal about when they think a stock is garbage. And so they put out a tweet, and let me just pull it up here. The tweet from Citron with 150,000 followers was, let's see, that was GSX. GNUS to $1 fast, the lowest form of retail investor. Consider LTM GNUS Rev 5 million market cap, 800 million compared to the leader, WildBrain, Teletubbies, et cetera, et cetera. Not to mention the massive dilution, and they think it's stock promotion. So, they're accusing it, the company, I suppose, of trying to, some companies, and I don't know if GNUS did this, but some companies will hire actual stock promoters to do PRs and promotion around their company with the goal of increasing the stock price. It's kind of like, it's like hiring a publicist, like a PR type of person. But it's kind of a shady area because it's paid stock promotion, and we do see it sometimes. And sometimes when that's happening, you'll get emails about, this stock is going to go up here, it's going to do this or it's going to do that. And at the bottom of the email, it'll say, this is a paid stock promotion. This company, whatever their name was, just whatever name it is. At the bottom, we'll say they were compensated, $250,000 for this PR campaign. So I think the legality on it is about disclosure and disclosing that it's a paid promotion when that is the case. And then obviously there's some regulation about whether or not, when the stock price goes up, if it does go up, if they are then using that to sell and dilute the value of the company, it starts to get shady. But, we see this stuff in the small cap world on a fairly regular basis, probably far more so in the OTC penny stock world. But in any case, so clearly this stock has made, as I said, a crazy move from 2 up to 9, 10. And perhaps some early short sellers got squeezed out as it went higher and higher and higher. But eventually, as high as they go, they will drop back down. And this one certainly did drop back down today. So Citron put out that tweet right around when it dropped here. It popped back up short term. And then people were also circulating news that they had filed an updated S3, which is a shelf registration for a secondary offering. So this was the S3 filed today, and it's people were saying it's an offering at $2, but it's an S3. It's a shelf offering. They're registering to sell 60 million shares onto the open market, and the proposed offering price here is $2. Now, they say with this little asterisk of that number 2, and I'll just turn on my drawing tool so you can see it. So they say right here, number 2, estimated solely for the purpose of calculating the registration fee in accordance to Rule 457. So this is a shelf registration. Now, what we will expect at a certain point, and it may be later today, maybe tomorrow, or it could be any time within the next 3 years, because that shelf registration is good for the next 3 years. It gives them the right to sell up to 60 million shares onto the market. And the actual price that they sell at could be very different from the $2. In fact, it's very possible that they've sold shares within, today. I mean, we'll find out. But so if I go back in here, this is our Warrior Starter class, which we're currently teaching as part of the summer school program. And yesterday we talked about the S3 shelf registration as part of our discussion of important SEC filings to be aware of. So here's the SEC search database where you can see the S3 shelf registration. These are the details of it. And then what you'll see is a direct offering, which is in accordance to the previously filed S3. And we saw that on AKER. So this was a direct offering here, and you saw it again right here. So these are direct offerings, and this is in accordance with the S3. So that's what we kind of are at this point expecting. Now, if you had a headline right now that they just sold 60 million shares at $2, that would be the direct offering. So it would be an offering of 60 million shares at $2, and there's a really good chance that the stock would get halted going down and would open closer to $2. It would be catastrophic in this type of scenario, given that the stock is currently at 5, and it really wouldn't make sense for them to sell it at that low of a price unless they were selling to an investment banker or something big firm that was then going to go hold the stock and sell it themselves or resell it. So, in any case, that created that plus the Citron tweet, plus the very fact that this stock is crazy extended was kind of the tipping point right here. As it broke VWAP, flushing down, people circulating news saying, oh my God, there's an offering at $2. Well, sort of, it's a shelf, and that was the proposed price. And then it goes lower, 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 now bouncing off the lows here. But this was honestly, serious drop from $10 to $4 or $4.50. It was not a pretty drop. So it'll be interesting to see where this resumes. But I am concerned that this doesn't bode well for momentum traders. There may be some traders who did get trapped, who didn't cut their losses, who didn't think it could go as low as it did and are under the water. Those would become bag holders. It's certainly against the strategy that I teach to hold and hope. It's not a strategy, but some people ultimately will do that. And probably primarily people who haven't received any type of education and are more trading from sort of the emotional perspective of, oh, I saw this headline, I'm just going to hold this till it goes to $100 or whatever. So that was GNUS, currently halted on a circuit breaker, coming back up, and has gap fill over 579 back up towards 7. And if it goes back to 7, I'm going to really be kicking myself for not continuing to trade it. But in any case, it is what it is. So CIDM, the second stock I traded today, the one that I actually made the most on, and our leading gapper in the entire market, gapping up 174%, 9.8 million share float, over 23 million shares of volume pre-market. This was just at 9:15, and I traded it pre-market. On this one, and someone asked me a couple of questions. One, what are my rules on trading pre-market? And what are the type of stocks I'd be willing to consider for a pre-market trade? So I have traded more pre-market in the last month and a half than I've probably traded in the previous 2 years. And it's because the market has been absolutely insane, and we have seen so much volatility, and I think traders have been getting so, trigger happy that they haven't been wanting to wait. As soon as something starts to pop up, traders have just been hitting that button and jumping in. And so collectively, I think it's forced some of us to start getting up a little earlier and watching the market sooner than we typically would. So the first move here on the, let's do 1 minute chart on this, 10 seconds, not really. So back to 624, yep. So I feel FOMO on it. I feel a little frustrated. Had the right idea on my dip trade, and I was too early, and then I just said, I'm going to stop here and do my recap, and that cost me a trade from 450 back up to 650, $2 a share. Whatever. CIDM, so regardless of how good you are, there's always opportunity to be better, and I could have done better today. It's not necessarily, it can be, you could say, well, that's greedy, you're already up $27,000. But it's also a competition within yourself to be the best trader you could be and to fully capitalize on the volatility in the market. And today I didn't. So anyway, CIDM, it broke over 350 here. And then this was where I took a trade on it pre-market. I bought this dip at 355. It was kind of a double bottom, a bounce off the $0.50. I then added as it squeezed up through 389. And it did a micro pullback at 411, and then I added again for the break of 411, and it squeezed up to a high of 445. That actually might have been my biggest position today if I go back and just look at my share size on it. So on that one, I had 10,000 shares, and then I added and got myself up to 15, and then I took another 2,500 and got myself up to 17,500 shares, and then added 1,000. 18,500 shares. That was my biggest position of the day, right here. And that was starter down here, probably 7,500 shares. Go back and check. But in any case, starter there. What was my stop? The $0.50. So right around 40, 48, 49. It pops up here. I add for the break through the highs, adding it the whole dollar. It pops up to 11, pulls back. I added it 405 for the break back over 411. And then we got that squeeze up to 445. So that was an awesome trade pre-market. And then I had another big trade on it right here for the break over 450. And this thing just exploded from 450, as you can see, all the way up to 5. Micro pullback right here, and then a pop up to 6. A sharp drop. Tried to do dip trades. Had one that was too early. Took a loss on it. Had another one. Got out break even. And then had another one that ended up being a little bit better. But ultimately, after that, I did a couple more dip trades, but it just wasn't, it was sort of the end. So, and then I switched more and focused on GNUS until stopping and then missing, obviously, this here. So that's where I'll finish today. Over $100,000 of profit on the month, which is amazing. So $100,000 was my monthly goal. So I just hit that in 4 days. So the new monthly goal, I would say, is like 125, 150 or so. And I just, yesterday, I believe it was yesterday, I crossed over $500,000 of profit on the year. So I've got over $500,000 in gross profit on the year. It's that was as of June 3rd. So we still have basically a full 6 months. And, I do feel like I'm setting myself up to have a really big day, but I also am at risk of having a big loss. And this trade where I bought that dip right down here, God forbid that actually had been news of a direct offering priced at the market at like $6. I would have been long into the halt going down. It would have resumed at 6, and I would have been down with 5,000 shares, or maybe it was 6,000. I would have been down $4 a share. That's $24,000, right? That's the biggest risk of doing dips, and I think it probably is only a matter of time before that happens. Although you guys have seen me lose 30 grand on a breakout trade. So I guess the question is, both strategies carry risk. My profit loss ratio so far for the month of June, I mean, it's kind of outrageous, but my average winners are $1,400. My average losers are 432. Average success rate is 85%. So, I'm being aggressive and my losing trades are less than 20 seconds. That's pretty amazing. That's kind of ridiculous. But what it says is that if I don't like the trade, I get right out. So we're in a market where we're seeing basically both on dip trades and on breakouts, pretty much instant resolution. The dip trade here from 4 back up to 6. So I'm never really red on it. Or if, the second I flush down and it goes red, I just get out immediately. So anyways, that's it for me. We're running a little late, so I've got to switch over for Warrior Pro students. We're going to start class here probably right around 11:30, so in about 7 minutes. And I'll put my disclaimer up there on YouTube. And, I'm going to shut it down here with $26,000. I probably, if I really was aggressive on that dip, I probably could have increased my profits, but I don't think I would have taken more than 5,000 or maybe 9,000 shares, maybe 10. I don't think I would have gone with full size because I really am concerned that there is the risk with this S3 that we could get the news of the direct offering. So I think that it is something that I would have to be careful of. And, 10,000 shares, if you lose $3 a share, that's a $30,000 loss. But even if I do end up having a $20,000, $30,000 loss, since my last red day, which was, if we go back here, so the last red day I had was March 31st. So since April 1st, this has been the most profitable green streak I've ever had. I'm on my 45th consecutive green day right now. My longest green streak was 56 consecutive green days. So I have a goal of hitting 56 days in a row, which means today's 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56. June 19th. I mean, that's it's not nothing. That's 11 more green days in a row. But if I can do it, June 19th, I will have broken my longest consecutive green day streak ever. And the profit since April 4th or April 1st is $395,000. Average daily gain, this is insane, almost $9,000. This is insane. So I was saying during my intro to the recap the other day how I wonder if this is what people felt like during the dot-com bubble. Like, oh my God, another stock is going up 200%. This is outrageous. But just remember, for those of you who might be getting fortunate to have some beginner's luck, things will slow down. And when they do, you're going to have to adjust your strategy, and you're going to have to be content with maybe only making a fraction of what you're making right now. On a regular day in a regular market, my average is $2,000 a day. So I'm currently averaging almost 4 times higher than my historical average. And, that's, if I go back to January 1st, 2017, which is when I began my small account challenge, we'll go filter here. My average daily gain is $2,352. And that's over the course of, literally, I don't know how many trading days it is, but you can see here, that's over the course of 1, 2, 3. Oh, that's distribution of trades. Distribution of profits is right here. I traded more last year and actually made a little bit less than in 2018. But I'm coming right up on that 2018 565 number. I'm going to be at, 530 after today, 532. So Anyways, GNUS, you're kidding me. Back to 8. Oh man, guys, this stuff really frustrates me. Well, here's the good news. In a missed opportunity is still a lesson, and this is a reminder. Certainly, I'm not going to chase it up here. That would be stupid. I'm green on it. I'm going to say that, you know what? Maybe I could have stuck it out a little longer and tried to make a little something off of this, but that direct offering is a risk, so do be careful with that. You could get that headline really at any time here, and it would be pretty disappointing. I've got something to show you guys here. Oh, it's hard to see him. There he is. He was just doing like a little digging right there. So we've got ourselves a little chipmunk. Yep. I'm not sure what his name is. I haven't named him yet. He's the one with a really small tail, though. I do recognize him. Oh. So we'll keep an eye on him. Yeah, this is... oh, look, he's so handsome up there. What a sweet fella. So anyways, that's going to do it for me. Let's switch gears and get back into class starting in 90 seconds. All right, see you guys there.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up and let YouTube know that this channel is the channel to watch if you want to learn about day trading.